Hey everyone, welcome to Bald Guy Money. There's a lot to talk about today after an eventful month of March for both gold and silver, and since I'm still on vacation, let's get right into it, starting with the topic of silver. Because a lot of channels, analysts, and newsmen have been talking about nothing but gold lately. But I want you all to take a look at this. Over the last month, the price of silver is up over 14%. While gold, which has been knocking on the door of its all-time high, is up slightly more than 7%. And if you take a look at the numbers I added here on the charts measuring the gains since the early March bottoms we hit, while gold has bounced about 9% off of those lows, silver has gained an astounding 21%. Now, despite these price gains on silver, my silver analysis tool, which is available for everyone who joins my Patreon, still says that silver is historically cheap. And that is influencing my personal purchasing strategy right now. Because just as I said in my last Patreon newsletter 2 weeks ago, I am now in a period where I am focusing my purchases on silver and scaling back a bit on gold. And although $28 per ounce has gone the way of the dinosaur at most dealers over the past couple weeks, there are still deals to be had out there, even as the price of generic rounds goes above $30 per ounce, because you see here Britannia bars are still available just under the $30 per ounce level, and that's likely where I'll be shifting my attention to, as I have already stocked up on Britannia coins and junk silver just before this run-up happened. Now, as you can see with my strategy, I'm not really in a panic mode right now, and I'll tell you more about why in a moment. But I do think it is a good time to remain dedicated to a dollar cost average strategy. And by that, I mean having a set budget, one that is affordable to you, that you can allocate to metals to purchase silver and gold with to protect your savings. And the reason I think it's so important to stay dedicated to that strategy, especially right now, is because of these developing news stories. Starting with Saudi Arabia, a very important country, a kingmaker of sorts whose strategic alliance with the USA has made the US dollar the undisputed reserve currency of the world. And this month, we've seen them moving even closer to the Shanghai Cooperation Organization. Now, this story here is from a few days ago, and it covers Saudi Arabia's new dialogue partner status with the organization, and although they won't get to drive the direction of the alliance, at least not yet, the member countries will accept input from Saudi Arabia as they increase economic cooperation with the bloc. And why this is so important is because it shows Saudi Arabia's willingness to cooperate closely with the rivals of the United States of America and other Western countries, which could be a signal that Saudi Arabia is just another step closer to accepting other currencies on a large scale in exchange for oil. And that would undoubtedly cause more weakness for the US dollar in the future, should it happen, and more upside for gold and silver. But that's really just the tip of the spear, because March also saw the collapse of Silicon Valley Bank, a story we're all familiar with by now, as well as the failure of Signature Bank and the purchase of troubled Credit Suisse by rival banking giant UBS. This has obviously triggered some panic in the system already and has driven the price of gold up and the value of the dollar down as faith in the Western economic system wanes. And all of this is happening while the Federal Reserve has been quietly expanding its balance sheet. Yes, first by $300 billion a few weeks ago, and then by another $100 billion just last week, which went relatively undetected and ignored by the mainstream media. And the sum of all of this is resulting in direct downward pressure on the dollar index, which I talked about in my last update on the topic of foreign mining stocks, which could become attractive bets as the dollar moves back into the 85 to 90 range, and I will link that video up at the end of this one in case you have not seen it yet. But all those points lead me to the main message I want to drive home in this video, which is a response to this question I received from a viewer named Ken Cause. Because he asked, why do you think it'll take at least 10 years for our current financial system to collapse? 80% of the world's population has now applied to join the BRICS countries, thereby effectively isolating the United States, Great Britain, and Canada. When this happens, the dollar loses whatever purchasing power it has left. Why do you think it's going to take 10 years for this to happen? And considering all the things that are happening right now, this is a great question. And it really aims at the core of why I am calmly but consistently moving more and more of my money into silver and gold. And the answer is that the US dollar is still important, even for countries like China and Saudi Arabia. And the unraveling of this system, it's a large system that took a long time to build, it will take time. Not because the BRICS want it that way, but because it is in their interest to do it slowly and gradually. As it stands today, China is the second largest owner of American debt, even though they are, for all intents and purposes, the main rival of the United States of America. And the main reason they would fund their rival is because it keeps the dollar relatively strong versus the yuan, keeping Americans addicted to cheap Chinese production, thus bolstering job growth and industrial development in China, which is a core element of their national strategy. But as the US and the West seeks to ramp up development of their industry to eliminate some of the supply chain weaknesses that became painfully visible during the C-19 pandemic, China, the leader of the BRICS countries, is becoming worried, and they are capitalizing on the dollar weaponization narrative to drum up support for a shift away from the dollar to secure a future where they can benefit from having control over a reserve currency and not be so reliant on their export economy. Now, the truth is the development of this infrastructure in the West is still years away. You don't develop and build factories and infrastructure in a day. It takes a long time, especially at the rate Western governments get things done. But believe me when I say that Saudi Arabia, who is the biggest supplier of oil to China, is concerned about this and is looking to hedge their bets to keep their biggest customer a long-term viable partner. Especially as the USA and the West drone on about moving away from fossil fuels and towards green energy. So please don't be fooled by all of this. It's not something that is going to happen overnight. And Saudi Arabia hasn't switched sides just yet. And let me tell you exactly why I say that. They still own tons of stocks in American companies. Saudis own some of the flashiest real estate in London, Los Angeles, Paris, and New York City, and they love the Western way of life. And this is coming from somebody who has spent a lot of time in Saudi Arabia, who knows these people and knows really how much they love the West and the Western way of life. That is no lie. I've been there, I have seen it, and I know this to be a fact. They are not keen to pack up and move to China, a country that has persecuted people of the very religion that is so important to them. And if you're not familiar with the story of the Uyghur people in China, I highly suggest you look it up to find out what I'm talking about exactly. My dear viewers, this is business, and things sometimes take time to develop in business. And I can confidently say this to you all today. This is the real thing that scares me when it comes to the US dollar. It's debasement. The fact that bankers and Wall Street traders are convinced that they cannot lose because every time they screw up, the Fed bails them out by printing more money. It makes every bit of paper we hold, whether they're US dollars or not, worth less, as there is more currency in the system competing for a fixed amount of goods. And this is exactly what has driven the stock market up over the last week. They simply believe they cannot lose. So Ken, I hope that answers your question as to why I think this is going to be a longer term transition rather than a flash crash that a lot of other YouTubers out there are talking about, and why I calmly talk about dollar cost averaging what I can afford into metals over time. With that said, please don't forget, everybody out there watching, to like and subscribe. I am only able to deliver this calm message to you all because I am not sponsored. Therefore, I have no incentive to scare you and get you to panic buy things you cannot afford. And remember, if you want more Bald Guy content, check out my Patreon. I will link it up in the description as well as the pinned comment. Not only do you get access to extra videos there, but you also get access to my newsletter, which I publish twice a month, giving really full updates on the market and pricing as I see it. So until the next time we see each other, everybody, take care of yourselves, take care of each other. I wish you all a fantastic Sunday. Goodbye.